Okay, guys, welcome. So this entire time, I thought I was live for the last 30 something minutes. I basically shell shocked right now that I wasn't live and I did all that. So it's okay. We'll fucking do it again. All right. Welcome, people. I hope you guys are still in the chats. I don't know. There's 6 people here. Thank God you guys are still here. I thought I was live chatting the whole time. I look up because it doesn't tell me how many people are here, and no wonder why I wasn't on live. I deepest and sincerest apologies about that. I was hoping to go live before the news came out, and yeah. So let's just start the normal thing. So shout out to My Flash Funding for giving us opportunity to give away this account. We will be giving this account away today. I know Nicholas is laughing at me, dude. I just broke down every trade, all the pairs. I just broke down so much shit, and we weren't even live. Fucking a. Okay, guys. Yeah, I know. I it's unexplainable. I was like, why is it not showing me how many people are in the chats? Blah blah blah. It's because we weren't even live. All right, guys. Let's start with US30 and let's break down. Again, as you guys know, we want to do a plan A and a plan B, and I'm going to redo all of this again. Let's start from the top, okay? US30 has been overall bullish, but here the last lately it's been bearish. We did break the trend line and we did have a change of character. So I sincerely think that the US30 is done selling off. However, I do think that this double bottom, which is liquidity, is going to get taken. Okay. See how we have this double bottom. This is a target. So if you're new to trading, the double bottoms and double tops are targets. Okay. We also have this area here, which is all liquidity, which is also a target. So what do we want to do? I honestly think that this market is going to come down and sweep these lows down here and then buy back up. So that's our plan. That's one of our plans, the plan A. But right now, as you can see, we have bullish momentum. So what I would be willing to do is look at this 88.6 Fibonacci top to bottom on this area and take this sell to come down to here and then to buy back up. Okay. So those are my plans for US30. So again, what I did is I marked off the liquidity on either side, and now I'm trying to get into a buy or a sell. Remember that this area between this liquidity here and between this liquidity here, this is our no trade area. We're not screwing around in these highly manipulated, very, very risky trades. Okay. We want to wait till after liquidity has been taken. So if you're a trader and you want to write down some rules, one of your rules should be is you're not taking a trade until liquidity has been taken. The market is want to do two things. The market hunts and the market consolidates. So what is this? This is consolidation, right? And then what's it going to do? It's either going to hunt this top liquidity up here and then sell off to do what? To hunt this bottom liquidity, okay? So what do? We play on the fringes. By playing on the fringes, we play safer and we also have smaller stop losses. So for this move, for this top down to this bottom, we drew a Fibonacci, right? As you can see from here to here, we drew this Fibonacci, and I will be willing to enter the trade at this 88.6 Fibonacci level right there because this liquidity has been taken. Now, I always put my stop loss at 10%, which is right there. So I'm willing to take this trade for the profit to come all the way down here and to take out these lows. Okay. Now that's a 5.5 to 1 risk reward. I'll take that all day long because I have a target below, which is liquidity. I have this first this push down. I have a TP extension. It also sits right here at the fib zones. So I'm starting to stack up confluences on the buy side, right? So now we have a plan. We have a plan A and a plan B, buy zone. All right. So if this gets up into here, this 88.6, I will be selling. Sell zone. All righty. So that's our plan, guys. And so the first time I had this, I broke it down a lot, and I'm not really breaking it down as much as I thought this time because I'm kind of tired, to be honest with you. I already explained it all to myself. But if we do come out to like a higher time frame, okay, what I would like to use is this right here as the swing marker here as the swing marker, because really this is the consolidation. So if we draw the fib then from here to here, This is where I get my sell zone here. So, right, you see this sell zone? That's where I got that sell zone from. The 78.6, 88.6 there. So we'll delete this fib because now we know where the sell zone is. We also see there's a gigantic fair value gap in this area, which is the bottom of this candle right there to the tops of these candles right here. So that's our fair value gap. So we have a reason for price to get up here. We have the Fibonacci, the 88.6, right? So there's different reasons for the price to want to come up here. And again, if we play the Elliott wave situation, look at from the bottom here to the top here, this TP extension is sitting right up here at the top of this fair value gap. So we have a reason for the market to want to push to this level before it turns around. So we can try a smaller internal move trade, which would be, this trade right here, knowing that we should, that it is a little on the risky side and the safer trade is right above it. But, we'll see. That's plan A. Again, the buys, if it breaks all of if this market just comes down from here and breaks this, then we'll be buying down there. So we got a plan A, we got a plan B. Right now, as you can see, it's pushing up. So here, maybe in the next 30 minutes to an hour, we could look for sells. Okay, guys? So let's just delete this. So the plan attack then is to sell right here at 38.510-ish area, 38.514 in this area here, right at the 88.6. Your stop loss would then be at 10%, right around the 38.693 area. And again, our TP1 target would definitely be the double bottom, but really it's down here at the 37.554 area. Again, this is just for training. This is not financial advice. You guys do what you got to do, okay? So yeah, that's our plan A now, is to sell when it gets up into this zone. Let's look at nasty NASDAQ. I'm already in buys. Okay, so I'm not looking to get into more buys unless it breaks. It comes all the way down here, which is not going to be today. I mean, there's just not that much volatility today. So on NASDAQ, it's quite a bit different. It's a different trade than 30. If you see on 30, it's consolidating in the middle and it's not ranging, and we're going to try to play this liquidity top to bottom. So when the market does this ranging, right? When the market does this ranging back and forth, we can then look for liquidity zones, right? And we could take trades on the opposite side of those liquidity zones. Okay, like this. And this is what US30 is doing now. So this is one type of trade. Okay, if I click the damn thing, give it to me. Okay, right? This is what we're doing now on US30. We're playing the zone to zone on the opposite sides of the zone to zone, which is what we're doing here. NASDAQ is completely different because NASDAQ is ranging. You see how it's following the structure of the trend lines and the Fibonacci's. So it pushed up, it broke structure, and gave us a 78.6 rejection. Came back off, gave us another 78.6 rejection. So it's a completely different type of trade. So that's what we're doing here. We're playing these zones, and there's our entry right there. All right. And the same thing for down here. We're playing the zone. We actually didn't get a perfect 78.6 on this one. We were pretty close, but we didn't get it. All right. So to be honest with you, my power is probably about to go out any minute now. Let's just go ahead and give this account away right now before my power goes out because it's raining its ass off. All right. Put in the chat. There's only 8 people in here. Put in the chat, what is the magical Fibonacci number? First person to put it in wins the chat. What's the magical Fibonacci number? The strongest. Yeah, let's just leave it at that. The number. Wisconsin fishing, huh? I got a boat down here. I do bass fishing down here in Texas. As a matter of fact, I was talking to my buddy last night about going and catching some huge alligator gar. All right, Mr. Hernandez is the first one to put it on there. The magical Fibonacci number is the 61. Oh, you're not. Oh, never mind. I stand corrected. I'm waiting still. You had me with my dyslexia. Still waiting. Still waiting. What's the magical Fibonacci number? There you go, Nicholas. All right, buddy. You get it. Yeah, sorry. Crazy trading. You already jumped in the first time with the 88.6. Now, I will tell you this. The 88.6, well, you guessed correctly, Nick. The 88.6 is the area where NASDAQ and US30 like to reject because they really retrace the majority of their move, because if anyone's getting in early, they want to come and screw those people. So, like, for example, these people who are buying here at the 78.6 probably aren't safe. It's probably going to push up like it did right here and then come back and knock them out of these trades right here and then buy up. The magical Fibonacci number is a 61.8. That's the golden ratio. The whole world revolves around the 61.8. So, really, where the 78.6 and where the 61.8, where these numbers come from, right, are just ratios of this area. So if you say that this, a little bit of lesson for you guys, if you say that this is the overall area and this is the 61.8, if you then look at this area here, you can subdivide this into different ratios, and this is how you get the 78.6 and 88.6. All right. So that's just, these two are just ratios of a ratio, which is basically this smaller box. Okay. Getting into the weeds on that one, but that's where those two numbers come from. Yeah, the magical number is 61.8. Anything else comes from that. So, Nicholas, whatever social media you know me on, Telegram or Discord or Twitter or Instagram, send me your name and your email address, and I will get them to email you your free 10K account. Thank you guys very much for joining in. We'll go over Goldie here in a little bit, but again, there's no guarantee because it's raining so bad that my power is going to go off. But anyways, let's look at. So we're covering NAS, and we're covering the type of trade that NAS is, which is different because this market is ranging. We're now playing just a straight up 78.6, 88.6. And we're also looking at, we haven't talked about divergence yet, right? So if we look at the RSI, is the only indicator that I use, when it gets overbought and oversold, overbought up here, oversold down here, this is giving us another reason to sell. When you see that the RSI is getting weaker, as it does on this point, but if you look at the charts up here, the chart is getting lower, so it's continuing to sell. Yeah, the dyslexia, that's what I got. Yeah. When it's continuing to sell off as the price is getting weaker on the RSI, that lets you know that this is going to turn around. So not only do you have your fib zones where you're looking to enter, that means your ears are perked up, you're really paying attention now. Hey, it's in my 1 hour, my 2 hour fib zone, let's look for a reason to pull the trigger. Well, you come down to 30 and you're saying, well, shit, that's divergent. You could come down to the 5 or the 15 and really start to look at the divergence right here, right? And then you start getting some super sniper entries. So when you guys see me take an entry with 2 or 3 pip drawdown, that's because that's what I'm doing, right? And so look, and there it is, there's divergent. It's lower on the RSI here. It's getting weaker on the RSI here. There's your touch. Look, it's even getting weaker right here, and there's your touch. Sorry, 1, 2, 3. 1, 2, 3. 1, 2, 3. Turnaround. Bam, gone. And same thing down below on the RSI. Okay, so that's how you find those entries. Let's look at Goldilocks real quick. So I'm in buys on gold off of this area here, right? So I was in buys there yesterday after 78.6, or actually after this rejection area there. I bought kind of as it was breaking. So what's my plan for today? Well, again, we have the Elliott wave starting to form, but we haven't even had the second leg yet, right? We're catching this off the bottom. So I have another buy limit setting here at the 78.6. And again, what that is, guys, is just, you see this Fibonacci from the bottom to top, right there. It's oversold here, right? So now look, guys, this is exactly what I was just talking about. Exactly. So let's just delete and clear some of this up so we know what we're looking at here. All right. On gold, you see there's a double bottom forming, which is going to get taken out. You see how the RSI is oversold here? So what we can hopefully find is then this breaks the RSI here as the same time that the diversion is going to be less. Excuse me. The price is going to break as the RSI is getting weaker. and we can find an entry right here at the 78.6. There's also this previous sell candle that's not been touched. It's a virgin candle. This low and this low did not take out this sell candle or these sell candles. Okay, so if the price does come back down to 78.6, or at least this area, the top of this candle, it would then negate these people and let them get out of their drawdown trades, right? And so if we look for zones of support and resistance, we see support, support, it comes back and finds resistance in this same area of like 2292, which is exactly where this candle is. So if this market comes down, sweeps this liquidity, finds this candle, which is also our fib zone, and hopefully give us the RSI divergence, or at least the oversold, and we could pop another entry. So that is Goldilocks right there, right? We also have, if we zoom back out a little bit, you can see that 4-hour trend line above. You see this trend line? 1, 2. This is the third touch on the trend line. Guys, the more touches on a trend line, the more vulnerable it is to break. So it's not inconceivable that this trend line will now break, and perhaps if you're a trend line trader, you get into another gold trade. Again, I wanted to cover the Fibonacci's. If you draw the Fibonacci to the top where you know the top is, right? We know where the top is. And this is, of course, we're zoomed out on a 4-hour chart. So you're looking at a larger scale. You can then start to draw the bottom to, these bottoms, and start to see where these zones start to line up, with price action. Okay. And when you find a good price action that's starting to respect these zones, your fib's in the right spot. Now, I like the Fibonacci at this spot. And if you ask why, is because look at this 23.6. You see how I've drawn this box? You see how it's just acting as resistance? And look at this 38.2. The same thing. These wicks here, it's finding it resistance right in the zone. Actually, let me draw it to this low. That's a little bit, is that better? No, it's not better. This low right here. Yeah, okay. And then we look at the 50. We'll look at the 50 right here. Look at these wicks right here. Look at this little kissing candle right here, right? And so you draw these fibs, you start to see where the price then lines up. And once you figure that out, leave that fib on the higher time frame, okay? Because all of this price in here, all of this is basically working off of that Fibonacci. And you could use these levels to help figure stuff out. Now look at this 78.6. You see the 78.6 right here, wicked and closed below the 78.6? And look at this 88.6. It's wicking and closing above the 88.6, right? It came down and pushed right back off. So we can use this to our advantage. If we come back down to gold on the smaller time frame, let's reset the chart. Look at this 88.6. It's right here in this area, which is right next to this 88.6. Again, gold loves the 78.6, especially on the smaller time frames. So we're going to be looking to take the 88.6, excuse me, the 78.6 buy right there. I'm not saying it's going to hold. It could come down to the 88.6, obviously, but at least we have a good idea. We're having our larger time frame fibs match up with our smaller time frame fibs. We can hopefully catch an entry. All right, so that's plan A for there. Now let's see if we can figure out where some liquidity is here. Not really the best. I mean, you have the top. There's not like nothing else that goes on this side. Let's zoom out a bit. You have this kind of a double top. Yeah, I kind of like this area for liquidity then, right? Because you have these bottoms and you have these tops. So if you do catch a buy, then your TP needs to be at least this area right here, which would be the 2350 area, right? 2350. So I'm already in a buy. I'm not sure exactly where my TP is. I have to go back and look at the broker, but it's sure it's going to be right in this area here, or if not this area. I think actually it's up here. I think my TP is up here for now. So that's gold. Just double check on NASDAQ 30. So 30 is still pushing NASDAQ. NASDAQ's just screwing around. So guys, is there any questions on any other pairs or anything? We can take a look at crypto real quick because I know I might have some Bored Apes in here. And so the Bored Ape guys are always crypto guys. So again, I like to look at this crypto stuff on a daily, all right, because it's so damn volatile. We have this gigantic fair value gap here. Where's our Fibos? All right. That's the 50% fib, which is also probably 50% of this fair value gap, which was there. It came back. Yeah, look, it came back down and hit 50% of the fair value gap and 50% of the Fibonacci is pushing back off. Now, I'm not saying it's done selling there. I mean, honestly, I think it's going to come down probably to the 61.8, the magical fib number. Congratulations, Nico, and then catch it there. So if I was a Bitcoin buyer, I'd be waiting to buy back down at this 52,006 area. Ethereum, again, look how it's completely different. Look how you just look at this and see, you can see the Elliott wave forming, right? You can see that there needs to be one more push on this Elliott wave. When you say 10% loss, it was 10% of 10% of the Fibonacci. Yeah. So if you come into Fibonacci, the tool on your trading view or whatever, and you mark off a fib, you come here to the settings and you set it at 1.1 right there. Okay. So these are all the fib levels that I have. I don't necessarily trade, like I don't trade the 236 like these levels, but I just want to know where they are. I have them on there just for visual reference, right? I have the extensions, the negative, which would be the extension 236 and 80 and 61.8. Those are my TPs, and that's why I have them in blue. Excuse me, green. And then I have the stop loss in red, right? Because it's red stop loss. The rest of them you can make whatever color you want. Like there's no particular reason why this one's blue, white, whatever. I should probably just change them to white, and I should probably change these to green as well. But it doesn't really matter. Yeah, I don't. Okay, that doesn't look good. Change it back to purple. Yeah, so that's it. That's 10% of the overall fib. So as the Fibonacci grows, your stop loss will grow. So I like to always take trades inside this zone, the 786, 88.6, gold 786, NAS and 30, 88.6. And if you stick to those rules, if you stick to the rules of right there, right? Let's say US30, and you even TP1 at the 236, which would be less than your double top, you're looking at a 2.41 a trade for TP1, and you can let the rest of it go. So for me, this is a good way to keep myself out of bad trades. It's no better way to explain it. If you stick to this zone, you're going to stay out of a lot of shitty trades, and B, it gives you a good stop loss because if you think about it, let's just go to a different pair that's maybe a little bit cleaner. Okay, let's just look at this pair right here. Okay. If you use, let's say, this fib from there to there, okay, and you take this trade at the 78.6, right? You target. So your first target then could either be the 236, which makes sense because I mean, look at how this wick turned around right at the 236. Again, these are Fibonacci levels, and this is also support and resistance. So you could take TP1 right here. You're at a good risk reward, like a two to what was it? This is the trade. This is the trade I'm currently in. Golden fib setup. Yeah. So the question that I'm answering is this question right here. All right. So I like to target the double tops, right? And then even the extensions for your runners. Okay. And let's see. And so also a good trade, good thing is if you start to move or start to TP, if you want to start taking TPs here or here, that's exactly when you protect. Okay. So don't protect too early. But if you're willing to tell yourself, hey, I need to shave some of this profit off, that's exactly when you protect. Okay. You do it at the exact same time. So if you stick to these Fibonacci levels, 78.6, 88.6, it gives you a good R to R. It also lets you be clear if they want to come down and set a double top, excuse me, a double bottom, your stop loss is below that double bottom. So it protects you from that. Or even if it wants to go just below that double bottom to grab liquidity and then take off, you're protected. All right. So then you have to think about where you're going to take TPs. And again, the TP should at least be the 236 double tops, and then you target these extensions for runners, and then really you always let a micro or something run forever, and then you just trail the stop loss after that, and that's when you can hit those 1,000-2,000 pip trades. All right. So I hope that explains that. Ethereum. Let's go back to the daily. So I sold 2K here. And yeah, so we're looking, yeah, again, we're looking for the 61.8 here because look, if the 61.8 is also the top of this area, which is a perfect support resistance. So if you're going to be buying Ethereum, I would wait till this 61.8. Let's delete whatever that is. So I mean, there's a fib top to bottom. There's your 61.8. There's your support resistance area. That would look like a good area for me to buy. Right? You might go into some drawdown, but again, these, I mean, you're not. I mean, I'm not short trading and scalping Ethereum and Bitcoin. You know, look at how the 50% is already starting to build liquidity. Look at this liquidity here. All right. So the market is very probably going to come down here, break through all that, find support, and then pop off. I'm really interested in Solana because I love Solana. I have NFTs in Solana. And it's the same thing that I just explained on Ethereum, right? With the support resistance 61.8. Look at Solana. Support resistance. Here's the old high. Here's the old resistance. Resistance popped off, formed support 61.8, and now it's finding support. Resistance, resistance, support, support, support. Magical fib 61.8. So let's hopefully, and look, too, this technically is a break of structure right there and right there. So we zoom in on that. You see how this high is above this area right there? That's a break of structure. It just came back down and gave us a double bottom. And hopefully now this Solana is going to go to the moon. I would love that because, again, I own NFTs and I have Solana. Let's look at, and I think it's pretty much the same thing for Cardano. I got a lot of Cardano. All right. So same thing for Cardano. Cardano. It has resistance. It popped off resistance. It broke it. Now let's see what this is at on the Fibo level. 61.8. I mean, it came down below, but these wicks are all kind of coming up, right? Look at all these wicks. The buyers are sitting here. So perhaps what is going on is this right here on Cardano. You've got these tops and you've got this consolidation area. Maybe that's what it's finding as support, right? Maybe the should be drawn right there. The fib should be drawn from the low, 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 which is okay. I'm cool with that. But look, let's see if we can find now that the buyers are starting to show up in the forming support. Let's see if we can find Cardano to pop off. And DOT is pretty much the same thing. Support, support, and look at how it's finding support. These long wicks push back up on DOT as well. I don't trade JIP, but I said the other day that this is probably going to push now because it broke the trend line, right? And so now it's just forming again. It's forming a double bottom. It's forming a double bottom. Where's the Fibbo? Right here. 61.8. So maybe it likes 78.6. I mean, is it just coincidence that it wicks the 78.6 and then closes way up here and then down that support? I mean, if you had a buy limit sitting on the 78.6, how stoked are you? You went into $1 of drawdown or whatever, and it just starts to push back up. So these fib levels, man, they work, dude. They work. So just get used to using them. If you're a trend line trader, fib, whatever, just know that they're there. Put them where they seem to make sense. I mean, put them. I mean, this is obviously the bottom. Look at this big wick. I mean, you could maybe move it a little bit to right there, this bottom, right? But this is for me, it's like the localized bottom. And I just drew that real quick off the top, and there's your entry, and boom, there it goes. I mean, it's not super hard. Hopefully you guys will incorporate those. When I started using Fibonacci's like this, man, it really, really, really changed the way. So shout out to Austin Collins, the owner of the Bored Ape. And I don't want to say the owner of the Bored Ape because everyone owns them, but he is the quote unquote owner of the Bored Ape Solana Club. He was my mentor who really got me dialed in on these Fibonacci's. And dude, they just play out over and over again. So here's 30 pushing off. It doesn't look like we're going to get an entry on the buys, but that's okay. We can catch this entry on the sells if it gets there. We'll see. Maybe it's tomorrow. NASDAQ, we're already in the buys on 78.6. Again, it's just screwing around. There's not much volatility, and the market has interest. So here we go on gold, though. Look at how gold's dropping. All right. So if gold's dropping, that means that my limit is probably triggering right about now, which is cool because look, now the market hasn't opened. Now what are we getting? We're getting well, we don't want to see divergence in this situation. But if we start to draw a little trend line on the bottom of the RSI, maybe. All right. Let's see if we can find a gold buy. I mean, honestly, right now, I would, if I was you guys, not financial advice, but you know, now would be a time. Pending order has been activated. Okay, so now I'm in gold right now. You can see it on the bottom right hand side of the screen. So I'm in gold. Let's fucking go. We are starting to get right on the 30%, which is the the oversold in the RSI. So I'm stoked there. Let's go to the smaller time frame. Look at the divergence on the small time frame. Here it is. All right, guys, this is how you catch sniper entries. I'm not saying this is like the best entry, but I'm just saying this is how you do it. Did I just say do? Look, lower, it's getting weaker. And if we minimize this now, you see how the price, look, price from here is going down, but the RSI is getting weaker, guys. This is divergence. So on the smaller time frame, it's getting divergence right into our 78.6. Here it is. 78.6, 88.6. All right. What did it do? It took out liquidity. It's finding our thing. We are finding our area. It's just now hitting the 30. And this is right before market. So in my thinking, it's selling off now. So that way when market opens, it's going to fucking rock it off. So, I mean, do what you guys want to do, but I'm in right here. Probably for maybe a 1% or so. Why does it say start cam? Oh, for some reason my cam went off. Probably because my power flickered. So that's why I guess my camera is turned off. No big deal. You don't need to see my ugly mug. Right? Let's just do this. We don't need a cam. Okay, so yeah, we're in gold buys as of right now. Let's go back out to the 15-minute just so it can look a little pretty. Have we got 6 people in here? Okay, so let's do this then. Let's capture this, copy image. Let's go into the Discords. Let's go to my little tabby here. All right, hit that there. Let's go to the apes. And let's find my little tab here. Got it. Let's go to here. And let's go to Goldilocks. Bingo, bingo, bingo. Got that. Let's stop in and check on the Telegram boys. All right. We're good. Let's see what happens now. Okay. We are divergent. We are in our zone. This is pre-market open, I should say. This is the time frame that I like to buy and sell because I want to see the market open and give us a push, right? So I want to be in for me, personally, I think the market wants to set up and get into an area of buys or sells before the bell rings so that way that everyone drops their money and it fucking goes. So this is the reason why I like to trade right now. Some people ITC want to trade, the macros at 9 and blah, blah, blah. Well, I hope to have already been in that trade by then. It already hit, So here it goes. Look, see how it's hit our zone. Let's see if we can dial in. All right. So this then would be the order block. Right. This would then be the order block that led to the big buy off. What I mean by that, this is where money, and actually we could probably expand that, but they're putting in money in this area and it led to that big buy off. Okay. So this is the order block. Perhaps we could expand that order block just a bit, but you get the idea. There's the order block. Okay. Where's our support and resistance zone? We kind of have a zone right here. Okay, resistance, support right here, which kind of, if you honestly, matches up right with where our candle is right now. Okay. I also like to look at if there's any sort of old sell candles that are left over. Now, what I mean by that is these candles here have been taken out by these candles. So we have nothing there, right? This candle here got wicked by that candle. So that doesn't count. This candle here wicked the top of this area. Well, I guess not. I guess this then would be the candle right there. This little area right here would be the candle. So let's do that. That's the last little virgin candle that hasn't been taken. So we can draw that off. And that's right where our price is going right now. We'll see if it holds. I mean, all we can do is play the percentages, right? All we can do is play the percentages and see if it holds. It's a lot of fucking momentum, though. I'm not going to lie. It's a lot of momentum. And we're still divergent, technically. Not by much, though. I'm not locking it. I was hoping it would have turned around by now, but it's okay. Maybe it wants to give us a double bottom, 88.6 or something. Is anybody else in this gold buy? Anybody else buying gold? Yeah, cool. This is it. I mean, if we looked at 30 in NAS, there wasn't really much going on. 30 is not really moving a whole lot. NAS isn't really moving a whole lot. Gold is the only one moving. This is kind of why you play, more than one pair. And again, if NASDAQ and 30 are still being bullish for some odd reason, and I can't explain it, NASDAQ and 30 are bullish. They're following gold. Usually they don't follow gold. Usually they're an opposite. You think of gold as a risk off situation, risk on situation, and then they would go in opposite directions. But here lately, the last couple of months, everything's been going up. So I like to see these wicks and push off. Now, if you really want to be a super sniper, which I'm not saying you should be, we come down, we look in here, and we look to see if any of these candles don't have wicks. And it looks to me like they all have wicks. Wick. So if we saw something that did not have a wick, then we could target that. And if you're like getting scared of the trade, you'd be like, well, it's going to come back and at least hit this candle, and then we can get out of the trade there. But I don't see anything. But do look how there was two candles right on our zone that pushed up, and then it came back down and smashed them. So it's just grabbing liquidity. We're just a bit early. It's all good. We'll stick here on the 15 minutes and watch it. Market opens. So well, this candle will close in 1 minute. The market open 15 minutes after that. I'm not going to stick around much longer after 8:30 because I have to take my kid to school. 8:30 my time, 9:30 you guys' time. Market open basically. Hey, thanks again for my flash funding, guys. Go check them out, and please do me a favor and follow my my YouTube. Subscribe to my YouTube. I'm trying to build this up. That's why I don't charge courses and I don't do signals, any of that stuff. Because I figured if you guys like the content and I get enough people to subscribe to YouTube, YouTube will pay me. I'll start getting ad revenue and all that good stuff. So I don't need you guys' money. I just need y'all to hit that subscribe button and I'll get YouTube to pay me. Give me 1 second. I'm going to go say hi to my daughter. She just woke up. Boy. You guys waking up? You guys waking up? Oi. What? Hey, thank you guys. I see we have a couple more people joining in. We are in a gold buy, and we're hoping it's going to reject. We're getting off the 78.6, or getting in on the 78.6. And yeah, we're looking for this buy opportunity. We do see that it was divergent on the smaller time frame. So we're still divergent, guys. We're still below this. Actually, we're double bottoming now on the RSI. Let's look at the 3. So yeah, I mean it's really not divergent anymore, unfortunately. Um, Price is getting lower, but the RSI hasn't gotten lower. If anything, is the RSI is double bottoming. So it is kind of still divergent. I like to be a little bit cleaner. I was hoping this would stay above the 30. Unfortunately, it popped through, but it's all good. We're still in the trade. No big deal. So again, if we look at the confirmations we have the 78.6, 88.6 buy zone. So that's 1. We have our little order block. It's retesting our order block. That's 2. We have the liquidity being taken out. There's 3. And I'm pretty sure RSI is oversold. There's 4. So we're getting 4 different confirmations. The only thing that's really going against us is this localized bullish activity. Bearish activity. You in there? All right, she's gone. Put my headphones back on. Yeah, I don't know why the camera is not working. Edit name, that spot, remove, not remove. Oh well, it doesn't matter. Stop cam. Anyways, that's what we're playing. So I mean, we've got 4 or 5 good confirmations on why we should be buying up here. The only thing really going against us is that local, the bearish momentum as of late, and then this drop of candles here. But it's okay if it wants to double bottom. I mean, we don't really want it to double bottom, but if it does, we're protected from that with our stop loss is below the double bottom. So this is also helps out guys with these fibs of knowing exactly where your stop loss needs to be. So when you enter the trade, you can calculate your risk to reward precisely. Like you're not guessing as to where your stop loss is. For this case is 2277, and you just do your 1% right there. Or if you feel really strongly, you do your 2%. Now, if we come back out and look at like a 2-hour, I mean, we haven't really had a true break of structure. Like local structure, yes. I do like the fact that these bulls stepped in here. And so I'm not saying this is one of those trades that you should double down, and extra risk, but let's wait till it breaks this trend line and we'll play the second leg. I mean, if this trade holds and this is the start of the Elliott wave here, this holds and this breaks on the second Elliott wave down here is where we'll throw in that fatter percentage to catch it, right? We'll throw in the 2 or 3% down here now that we've confirmed the bulls have stepped in and it's truly broken structure, and we'll catch that second leg. All right, that's kind of when you want to throw in that extra juice. Like in this situation down here, if you would have caught this, you could have thrown in that extra juice there, because now you have the break of structure, and now you're pulling back, and then now you could pop that larger entry. We're not quite there on gold yet, right? It hasn't really broken that structure yet. So we're still playing a little bit risky for looking for buys when it's selling off like this, but we have reason to believe that it could buy back up. No risk, no reward. Scared money don't make money. So here we go. It seems like it's kind of dying out. Let's look at the 5-minute, and these candles are getting smaller. So I think that was it. I mean, I think that was the entry. Small, 5-minute candle is small. We're starting to see a little bit of a bull push here. It's rejecting that little candle that we marked off earlier. It's also the 88.6. So we delete this and we delete this. That's the bottom of the fib zone, 88.6. So it's rejecting the 88.6, which is okay. So far so good. I have, to be honest with you, with the flash funding, the only problem I've had with them has been in the Discord. I would post links to, like right now, like my YouTube, like, hey, I'm going live, here's my YouTube link, and they would not like that because they said I'm self-promoting myself. So I would then I had to stop doing that. Like they banned me, and I got with the CEO, his name's Blake, and he let me back in, and I explained to him what I'm doing. I'm like, dude, I'm not selling anything. I'm not trying to quote unquote promote myself. I am, because I'm asking people to join my YouTube, but I'm not charging money, right? This free service. And at the end of the day, I'm promoting your company on my YouTube, and I have a link to your company on my YouTube. And so, like, let's partner up. And so he said, okay, that's good to go. We'll partner up. I'll give you 3 accounts every month to give away to your followers. I said, okay, good to go. But he just doesn't want me posting links on there, because then other people would start thinking that they could post their links and then start, you know how it is with people scamming and wanting to sell courses and boot camps and all this other bullshit. Like, I'm not about that. I'll teach you for free. I'll show you what I know for free. All I ask is you just hit that fucking subscribe button, right? I don't need y'all's money. I have my own money. I have my own house. I have my own shit. I don't need y'all's. Maybe one of these days, if I get like 10,000 followers and I start just banging out, $1 million years on trading, then maybe I'll be like, yo, pay me for these subscriptions, and that's just a write off. But I'm not about that. I don't need y'all's money. Look at this rejection of the 88.6. Come on, baby. I do not like this double bear candle. I'm not going to lie. But again, that's taking this liquidity right now. And so it could be the market scaring people out. And again, the market has a chance. It always wants to screw these people out who thought they were buying here. All these people who thought they caught a sick entry here, they're going to want to come and take these people out. You bought too early. And so that's why I'm not a fan of protecting too quick on NASDAQ. If you bought here, or let's say you're a breakout trader and you bought here, right? You're a breakout trader. Guess what? They're not going to let you do that. Sorry. Now is the entry. So, I re-entered down here. They're a funded company. They're just a funded company. They don't have their brokers. They use trading Match Trader. They use Match Trader instead of MetaTrader 5, because the whole deal with MetaTrader 5 kicking companies. So they're just a funded company. The way I say this is this: if you're a new trader and you don't have a whole hell of a lot of capital, I would go with the funded companies, because then you get the chance and the opportunity to trade a larger amount of capital. You get the experience, you get the emotional back and forth. You have everything that goes with trading a real $10,000 or $100,000 account. You get all of the same emotions, all the same risk, all the same everything, without having to spend $100,000 or $10,000 or $20,000, whatever, of your capital. So if you're a new trader and you're learning out, you can buy a $10,000 account for $75, and you can trade that $75 account, which is really a 10G account, for a month or 2 months or however long it takes you to either A, pass, or B, fail. Right. And so in the meantime, you get all that exposure to the market, you get all that training, you get all the emotion, you have then solid rules. You cannot go below 4% in one day or you lose. And so it kind of keeps you limited, right? And it trains you so that when you do have your own money, you do have your own capital, then you could really be in a better position to win, right? So if I told you I'd give you $10,000 to let you trade for an entire month, but it's only, the worst case scenario is $75 you're going to lose. Well, as traders, we're used to trading risk to reward. Well, there's a shit ton of reward and not a lot of risk, right? So that's my opinion on it. $100,000 account is going to cost you $500 or less than $500 on Match Trader. Honestly, on my flash funding, you could lose $500 real fast if you're trading US30 with your own capital. So why not trade $100,000 for that same amount of price? And right now, with the whole brokerage thing going on and all these companies kicking American citizens, I'm American, I'm from Houston. Why even do this fake citizenship thing or do this offshore account thing? It's super fucking sketchy right now. And so I know that the argument for against using funded companies is they could close down and they could take your money, blah, blah. That's true. Absolutely true. Let's say they do that. The worst case scenario is you have a $100,000 account, you paid $500, you lose $500 because you had a $100,000 account. But if you had a $100,000 account with an offshore broker and they close down, you just lost $100 fucking grand. Right. And so some people are like, oh, well, I passed this challenge and I had all this money in my account and they owed me like 30 or 40 G's and they closed down. That's not your money. Right? Like, yeah, you did the trades to get that money, but it's not your money. It's your money when it's in your bank account. Right? And again, if they close down and they screw you out of quote unquote your money, you only really lost the money that you paid in for the account in the first place. And with my flash funding, once you get your first payout, they're going to pay you 110 to 125% of your initial buy-in. So you're going to get your initial buy-in on your first payout. So therefore, anything after that, you're essentially positive. So yeah, that's my take on funded companies. It's if you're a newer person and you don't have a large amount of capital and you're still learning, by 100% use them. I mean, just use them. Screw losing your own. I mean, when I was new, I'd lose $500 of my own money in a single day trying to scalp US30. I get so pissed off, like fuck. 45 minutes scalping US30, I lost $400. Why would I do that? Like that's just ridiculous. Just go with the funded company and yeah, exactly. Fund accounting company could help you out a lot. Yeah, exactly. Offshore broker took his money. So I mean, that's why you I mean, if you look over here on my screen, you see the DIA. That's basically US30, but these are ETFs, right? So if you want to be legal with a legit company, you could go on here and trade ETFs. This is my Webull, right? I could trade Webull ETFs. And as you see, there's what the ETF look like. Now there's so many more gaps in here. It's because it doesn't do trading hours. It's New York Stock Exchange trading hours. That's why there's gaps. Right? GLD is gold and QQQ Nasdaq, right? So you see, if you want to trade an American broker, fully regulated, trade your own money, go to your Webull or your whatever you have, Fidelity or whatever, and trade ETFs. You can trade futures and you can get into puts and calls and all that shit. I don't understand it, and I don't trade that stuff. But you could just use. I mean, look at it. It looks just like Nasdaq, right? They're just not trading after hours, and you've got to work the gaps. But you could have very well bought right there. So if you don't like the whole offshore broker and you don't like the whole thing, then just come here and trade DIA Gold and QQQ or SPY. So SPY is the ETF for S&P 500. It says it right there, SPY 500 ETF. Or do like I do. I just still trade Nasdaq and US 100 and Goldilocks on the funded account. So let's go back to the 15 minutes. If you guys have any more questions like that, please shoot them forward and I'll try my best to answer the best I can. So again, we're on the 15-minute. If this closes, if we got one more minute, if this closes above the 78.6, which means the 30-minute candle, this is the 1 hour. If this 30-minute candle closes above this 38.6, we're even better off. Okay, we have market open in 1 minute, so we'll see if we get some fireworks here and get a push. And to be honest with you, it's been a while live trading this. We've actually had a fucking banger. Like I'd love to hopefully this one happens. Hopefully this is like everything's coming together. We do have the divergence, as you can see. Actually, on the 15 minutes, we do have divergent. Look, lower here and then higher there. So we do have divergence on the 15 minutes, which is not from this point, which is just from this point. Usually, though, it likes to make a 3 touch. And so hopefully it does not make that 3rd touch and it just goes from here. Thank you guys. Thanks, Jay Gold and Nicholas, Wisconsin Fisherman, and Mr. Frank. Thank all you guys for joining in today. I appreciate y'all stopping by, and hopefully we can catch this gold. So there's the market close, or excuse me, the candle close, market open. Where is L volatility? I don't see it. Come on, baby. Nick's no best. We tried to, bro. We tried to. It seems like I always find a lot of restaurants that are like seafood restaurants. They're Nick's Seafood, Nick's fucking this. Like, God, there's a lot of must be in our name because I love seafood. I have a boat and I go fishing. Like, and I used to be a sailor. I used to be a merchant mariner and sail around the roads. I've been all over the world on boats. Look at this. Look at this, baby. Come on. Come on, baby. Too bad my stupid camera's not working. There's a little push. There's the push we were hoping for. So now we're back in profit off my 78.6 entry. I got a little deeper than we wanted. It's all good. It's all good. So in this situation, like what I think to myself is maybe this trade will be a loser. Maybe it is. We don't know yet. The trade's not over, right? But at least with we playing the fibs, it's giving us a reaction. Okay. And it could, if you're let's say a really conservative trader, and you took that 88.6, it's giving you enough of a reaction and a push off that you could protect right there. If you had the 88.6, there's no reason why you can't protect, because it shouldn't come back down to that. Um, I'm not personally, that's not the way I trade. But if you do trade these fib zones and you get these reactions like we do have, the market will very often at least react to that zone and give you a push where you can at least protect. Like if you want it to be super, super conservative, I let it go. I just try to zoom back out a little bit. And so I'm not going to start protecting or until we get, up here in the 2300, 2318, this area, 2320 area. I'm looking for bigger moves, right? I'm looking for hundreds and hundreds of pips. In this situation, I'm not saying I'm going to keep this all the way, but I'd like to at least catch this 500 pips. And really, I'm looking for that 1,000. I'm not by no means am I saying I'm going to hold TP1 all the way up here. I'll probably hit TP1, to be honest with you, in this area here. Catch that 400 something pips on a Thursday, let that mug run through Friday and see if that'll be it. And that'll be my trade for gold. I mean, I already took some profit off of gold earlier in the week, and this will be my second trade. So really on gold, couple entries, couple trades, and that's it for the week. I'm not taking 3 or 4 trades on gold in a day. That'd be crazy. And the same thing for Nasdaq. I'm already in a buy. And I'm just gonna let that do its deal. Like, I'm not taking any more entries. I think a lot of new traders, and especially me when I was young, I would take 10 trades a day. It's ridiculous. You're just throwing darts against the wall and not aiming at all. And that's not a winning strategy. Yeah, let's go, Goldie. Look how it closes. See how it's closing above. See what I'm saying? Look how it's closing above. Let's just delete some of this trash. We already know some of this trash. That's the Marine Corps coming out of me. Let's delete some of this stuff that we can see nice and clear. There it is. All right. Also, this double top then, if you look, is a 61.8. So, there to be a good opportunity to maybe take profit, or the 236, because that's also the trend line, right? So we've got to make those decisions when we get there. If this is the trade and this holds this bottom, then there's no reason why this shouldn't hit the extension. So really, I'm not looking to take profit too early on this one. If anything, shave half off, leave the other half running, and then protect. And then if we shave off half, that gives us still a large chunk to make some money. And look at that fucking wick, dude. Let this candle close bullish. And if nothing else, I'm not saying that this is going to be a winning trade. We don't know, right? I'm not pounding my chest, but at least you guys got to see some of the thinking. You get to see that there's liquidity here that needed to get taken off of this low and off this one, pushed up, came down. We have the zone. We have the previous, order block sitting in here. We could come down inside the order block and look at candles. I mean, hell, really look at the 50%. Look at the order block and look how it's 50%. It rejected it perfectly. So we had the RSI, we had divergence. We looked at several different time frames. We looked at everything. I mean, we actually started up here at the 4-hour or even like the 8-hour at the fib and seeing that this 88.6 got rejected, and we had a nice push. So in the higher time frames, we have the 88.6, and on the lower time frames, we had it. All right. So we went through all the time frames, all the liquidity, RSI, order blocks. I mean, we've covered all of our bases, and we found that entry. So if it loses, it's just one of those situations like, well, fuck it. There's nothing we can do about it. It lost. But we gave ourselves 5 or 6 or 7, God knows how many confirmations that it should buy up right there. So I'm happy with this trade either way. Again, I've told you guys before, we don't want all the trades. We just want the best trades. And for me, that's a pretty damn good trade. The only thing really going against us is this momentum, and it hasn't broken the trend line. So, but again, you could be one of those traders who takes the trade here after it breaks trend line with the stop loss down here. No. I don't want to do that. I'd much rather take it right down here with a stop loss that looks like this. And that's, ladies and gentlemen, why I'm not a trend line trader. I know they're there. I use them for reference, but I'm not a trend line trader. I want to be in towards the bottom with a small stop loss, rather than being up here with a stop loss that looks like this. Yeah, that is not attractive to me. Can't even explain how bad it's raining outside. Look at this candle, dude. Come on. And look, and if it engulfs that 30-minute, I'm stoked. Now we've got, a whole another 30 minutes to wait before we can see where this candle closes. But I like that. Okay, guys, I'm going to get off here. I'm going to help my wife get the baby ready. And unfortunately, it's raining and I've got to take her to school. When it breaks this area here, maybe that's where we can protect. All right, let it go till there, because if it breaks, then that's a healthy amount of pips. You can at least protect. I'm not saying take your profit, but that's 120 pips, right? A lot of people are good with 120 pips in a day. A lot of people close that shit out and be done for the day. I know a lot of people, that's their goal. Catch 100 pips a day, fucking close and be done. I'm looking for 400, 500. Yeah. Okay, cool. Message me on Discord. Okay. Let me take care of my daughter. And when I get home from dropping her off, what I'm going to do is I'm going to send your name and your email to them. And I'll show you right now. I send it to them. I have an open ticket, right? Well, I thought I had a ticket sitting here somewhere. Anyways, I did have an open ticket in here. But anyways, I'll email the CEO and get back. And why do I not have a ticket in here? Oh, support ticket. Oh, maybe they deleted it. Anyways, I'll hit them with your name and your email, and they'll send you the login information. So, hope you guys enjoyed this. Please tell your friends if y'all have anybody else you guys trade with. Tell them to subscribe to the YouTubes. I'm only at like 280. I need to get 500, so I need to hit 500 before I'm even eligible to start getting paid out with the ad revenue and whatnot. So, do me a favor, throw me a subscribe in there. And if you guys have any questions, please comment on the YouTubes, and I'll do my best to answer those questions and or make a video just for you, just explaining what I'm talking about. Okay. See you guys on the next one. Y'all have a good day.